And ladies and gentlemen, all eyes are on the crucial MPC meeting that kicks off today as India continues to face elevated inflation and softness in growth. In fact, the MPC committee is largely expected to hold policy rates and maintain stance. But then the focus this time would be around on the liquidity management, and that's what is the word that we're getting from market experts. My colleague Gaurav is now joining in with what the big expectations are as far as that MPC meeting is concerned. Gaurav, so what really is expected so far as that big ticket meeting is concerned? We're given to understand that rates are expected to be held steady, and of course there's going to be no change in stance either, is it?
When we talk about MPC meet, first let's talk about what has happened between today's MPC meet and the previous MPC meet. We have seen two events actually unfolding. First was that when we talk about CPI inflation, that actually went above 6% level, and on the other hand, when we talk about GDP data, that came to 5.4%, which was actually at a 7-quarter low level and also below GDP expectation which the RBI had kept. So given that inflation is high and GDP growth is low, now the question remains is that is the rate cut is going to happen in this meeting? The answer, when we talk about economists, they believe that 81% of the economists believe that rate cuts are not going to happen in this meeting, and the reason being that when we talk about inflation, that has gone up and beyond 6%, which was actually a resistant level for RBI, and that is the reason why they see RBI will still maintain their status quo. When it comes to rate cut decision, they will not cut their rates and they will keep the rates at 6.5%. Now let's not forget that this will be 11th consecutive meeting where RBI will be keeping rates constant, because we have seen the last rate cut actually happening, rate changes happening on February 2023. Other than that, when we talk about some of the liquidity measures, we have already seen that the growth is actually not picking up, and that is the reason why economists believe that other than rate cuts, RBI can go for other liquidity measures like cutting CRR ratio, which is cash reserve ratio. When we talk about this ratio, this was at actually 4% level, which before COVID, which was raised to around 4.5%. So experts believe that we may see 25 to 50 basis point of cut there, and that can actually result into 1 lakh crores of liquidity pushing into the system. Other than that, when we talk about some of the major events like dollar has been strengthening and rupee has been weakening, any kind of commentary on that front is going to be very crucial. How RBI is going to project their growth number as well as inflation number is also going to be crucial, because economists believe that we may see some tweaking happening in these numbers as well. And lastly, when we talk about Mr. Shaktikant Das, his term is getting over on 10th of December. So any kind of commentary, is he going to get extension, or any kind of commentary on that front is also going to be very crucial from RBI. But all in all, when it comes to the rate cut, experts believe that we will not see any kind of rate cuts in this meeting as well.
All right, thank you very much, Gaurav, for bringing us all of those details. And ladies and gentlemen, while we await that much-awaited stance, RBI stance in the governor's speech tomorrow, we caught up with Kanika Pasricha, Chief Economic Advisor, Union Bank of India, on their expectations from the central bank. Let's listen in to what Ms. Pasricha had to say.
We are also penciling in a status quo in terms of rates. It's about the liquidity measures which are on bigger watch in this policy. All tools on the table: CRR, OMOs, FX swaps. The only bias we think why CRR may not be preferred in this policy is because the RBI is likely to revise higher their inflation projections. In fact, for this quarter itself, after the October CPI shocker for RBI, so we were at 6.15, but from RBI projections perspective, October to December, their projection for inflation is 4.8. It's tracking 5.5 as per our estimates. But the catch is, by the last quarter, so an upward revision in inflation projections for the full year of 4.5%, likely to be closer to 4.7, 4.8. But for the last quarter of the year, we think inflation likely to align towards RBI's projection of 4.2% after the 42% inflation and vegetable squares off as per seasonal trends. So we think near-term inflation a worry because of its status quo on rates, and maybe CRR, more than CRR, other liquidity tools may have preference like OMOs and FX swaps, but it's going to be a tough balancing act for the policy this time.
All right.
If you like this video, then like, share and subscribe to ET Now.